The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, joining us now for a market conversation as we are working towards the end of the year. We want to get some thoughts, what's happening in these grain and livestock markets. Bryan Irey with Crossroads Coop is joining us once again here on the program. And Bryan, it's always great to talk with you. Merry Christmas and Happy New Year to you and yours. Thanks for joining us here today.
The same to you, Jesse, and thanks for having me back again.
Well, let's start with the grain trade. Fairly quiet activity for the most part heading into the Christmas holiday and really through the week between Christmas and New Year's. We get that kind of thin, low volume type of trade. But we know there's some things out there. It seems like traders are watching two things here to the end of the year. South American weather, of course, in Brazil. But then the rail issues on the U.S.-Mexico border is something else that's kind of caught itself into this grain trade the last couple of days here. Would you agree with that? Is that kind of the two things that we're really watching in this grain trade overall, with it being kind of the holiday mode?
Absolutely. It's been a little unusual to be this quiet, but yes, a lot of fear with rail cars getting caught in Mexico, as you mentioned, and that is just a tough deal. The interesting thing is the rail car market, as I'm sure you know, is a secondary market, and a lot of times a grain company, a commercial such as us, will buy those cars from someone else, and they are certainly not wanting them to get stuck south of the border for any length of time, because it's incredibly costly when that happens.
Well, talk about that a little bit from your perspective, from a commercial end user perspective here, regardless of how soon this situation can get resolved. And I know it's we have the migrant crisis, of course, and things down there, but just in terms of the impacts to the ag economy and transportation logistics, I know it's already affecting a lot of folks here in the U.S. So, I mean, from your perspective here, the costs and just trains sitting around and moving grain, what could this potentially do to this market as we move forward here, Bryan?
Well, it does. It's going to force corn to back up in the interior, and no commercial grain company wants to carry corn with interest rates at 8 or 9%. It just is very costly. And so you add some costs there, plus you add the cost of the rail cars not moving, not running. And interestingly enough, it's not the railroads that have put the halt on this. It's really the government that has put the halt on the traffic going back and forth. But I think the implications are far-reaching. I think ultimately it could impact Mexico as well, as they're not going to get regular shipments of corn here moving forward, which the implications are far-reaching, and it's like you said, you understand the migrant crisis and what is taking place there, and you certainly don't begrudge people from wanting to come to the U.S. for a better life. I mean, I certainly don't. You just wish that it could happen in a more orderly fashion, but I think it's a mess that is going to run on for a little while here until we can get it figured out. And I think the implications are far-reaching on a financial basis, especially for the grain companies and for the folks that own the rail cars.
I wonder too, with the effects of this situation and getting some of this corn to back up into the interior and other grains, could it potentially depress basis prices here moving forward, Bryan?
Absolutely, it could, because typically the part of the grain company's bid process is what he can sell on any given day, and that plays in. It does help that we have big carries in the grain market, and you can certainly sell something out in the future or hedge it out in the future and make some sense out of it, begin to cover your costs. But a lot of corn on the ground this time of year that folks want to get picked up and gone too. So yeah, it's a costly endeavor. It just is it's a tough situation, I think, especially for the commercial grain company.
In terms of South America weather too, we're watching to see if the rains verify in Brazil. I've had some folks make the comment to me that it's maybe not being talked about how much rain they realistically need in Brazil with the way their soils are. And so there's some folks who are still very bullish this soy complex. I know where things stand right now, we've kind of gotten, front month beans down around that 13 level here on the board, but there's still plenty of folks out there that are fairly bullish in soybeans until we see how much rain falls in Brazil. Is that something that you're keeping an eye on closely, Bryan?
It's probably what is at the forefront now in terms of market drivers. And this week, the soybean market has been mostly on the defensive, which is a little surprising. But to answer your question directly, the rainfall amounts that they're getting down there, they seem to shrink as the fronts approach. The actual rainfall does, and I think it's just because they're in such a dry environment at this point in time. We see that here a lot in the U.S. in the summertime too, as the air turns drier, the moisture just dissipates before it hits the ground. And I think they're certainly in that situation in a lot of areas. 25 to 30% of Brazil is extremely deficit, it sounds like. And I think the other piece to that is it was dry when they began to plant corn down there and soybeans, pushing the crop back into a later period of time for harvest than what they typically see down there, which is going to prevent the second corn crop from being planted, which is a big issue in my opinion, and probably one of the things around the U.S. corn situation that could be modestly bullish here moving forward.
Yep. Hey, Cody.
Let's talk wheat a little bit here too. I know you're out in wheat country in the plains. We saw wheat kind of rally here, U.S. futures as of late, especially on the back of all those China sales for SRW. But now China's largely disappeared from the U.S. wheat market again. We know Russia's continuing to dump their cheap crop onto the world market. So, as you look at this wheat trade across all three complexes, and what are you watching here as we wrap up the year and move into 2024? Do we have a potential for a little more of a rally here, or is it all kind of dependent on China maybe stepping back into this market?
I think it really comes down to China stepping back into the market. And what happened was the classic case of a market being driven higher on demand. Unfortunately for the hard red winter wheat farmer, all the demand was on the soft red winter wheat side. But nevertheless, the wheat complex moved higher, priced itself out of the Chinese's needs here on the front end, as their own crop obviously is in poor condition. They have a lot of quality issues. And it's going to be interesting to see how that plays out here. We've also had a lot of rain over Kansas, northern Oklahoma, northern Texas here over the course of the last 10 days. And there are two more fronts moving through here in the near future that are going to more than likely get our hard red winter crop back into a place where we're more comfortable with it. Eastern Colorado is really dry. Western Nebraska is dry. But again, there's chances for rain here over the next couple of days. I just feel like today that the only way that we find more demand for U.S. wheat is for U.S. wheat futures to go lower. And it's interesting because you still have managed money very, very short in wheat, and they tend to scramble for the door when we see some demand. So it's going to likely continue to be choppy on the wheat side in terms of futures here over the course of the next several weeks as we get on into spring and can get a good handle on what our crops here in the U.S. look like.
We are joined today by Bryan Irey from Crossroads Co-op here on Market Talk. And Bryan, thinking about looking ahead to January and beyond, I know right away, for the most part, when we get into January, we got the WASDE report and we'll get a bunch of other reports from USDA out. And it's typically a very big report day. A lot of market moving news can be seen there. Surprises can be seen there. What would you say to folks on the grain side here thinking about risk management ahead of those key reports? Because I think largely as this market drifts through the holiday mode here, it's a time for folks to kind of sit down and put pen to paper here a little bit and figure things out ahead of a big report like that. So what would you say in terms of risk management here the next couple of weeks?
Yeah, I think the big thing that could come out of those reports is going to be an increased U.S. corn yield. There's a lot of chatter about the USDA raising corn yield by as much as a bushel per acre. The flip side of that's going to be what do they do with the demand side of the equation? And it seems like they've done a lot to that up here through the December report. I still think that we are in a very, very risky situation in terms of corn futures and corn basis. You've got a lot of the front end demand covered up here in the corn market. Ethanol margins have kind of turned south. They're not good at all relative to what we were seeing here through the last 6 months. And we talked about the situation with Mexico potentially backing corn up into the interior. It just feels like we're in a situation here, Jesse, where you not only have risk in the futures price, but you also could have some risk in basis as well moving forward here. This environment that we're in with big corn carries, which is driven by a huge corn supply, is a classic case where the front month will typically go off the board and the next month up will just drift back up to where the front month went off. And it certainly feels like that's where we're headed. I think that is the one biggest risk in those reports. Secondly is going to be Brazil production, which is going to be back and forth, I think, here for a little while in terms of the weather developments down there that we were just discussing.
Let's move over and talk livestock, and we think about the issues along the border between the U.S. and Mexico. I wonder if that could maybe have an impact on cattle and hog prices here as well as we move to the end of the year and into 2024. So that's one caveat. I think let's just start with that. Do you think we could see any impacts? I would think maybe could have some impacts on feed costs potentially if we back this corn up and more and back up soybean meal, et cetera, into the interior. What do you think about that?
Yeah, absolutely. I would agree with you there. And it's interesting to note too that Mexico has an ongoing drought in its country as well, which has driven a lot of cattle up into the U.S., partially responsible for the big placement numbers that we saw back in November. We will have to see how that plays out here. And obviously they are importing a lot of corn to feed the cattle that they do have. So that goes back to the logistics problems that we've had. We do have a really important cattle on feed report out this afternoon, and I think it's going to be interesting to see how that plays out. Cattle numbers are way larger here on the front end than what we had originally anticipated. And, with the dry weather that we saw in the late summer, cattle got pulled forward. I think we end up here as we move on through the year with feeder cattle, live cattle, all bouncing right back to the kind of levels that they broke from here over the course of the last 60 to 90 days. And, I don't know if you have looked at any of these estimates for the report today, but cattle marketed were at 93.2% of a year ago, which implies about 1.762 million cattle killed. And I think we're still backing up cattle in the feed yards. Those are still some of the cheapest feeders that are available out there. And I think with the product being difficult to move, we're going to be shipping a lot of heavy cattle here on the front end. So we probably end up in a situation there with a A lot of beef on the front end, but by the time we get to late spring, early summer, that's gone, and we go to the other extreme again.
I wonder too, in terms of this livestock market as a whole, we obviously have seen the economy, the broader economy, impact things here across
Yep.
ag all year long, and really last couple of years. In the talk of rate cuts and more, getting into 2024. You look at the economy. Are you concerned about that having a negative impact overall, especially on cattle prices continuing here and some of that domestic demand as we move into, and export demand for that matter, as we move into next year?
Absolutely. I think that is a big, big deal. With product backing up, it is not a good situation, and it kind of depends on who you listen to. Obviously, the high end cuts are going to back up first, but I think that you just don't see a lot of beef being moved through the retail outlets like you typically would, for the very reason that people don't have money to spend at this point. And I think it's helped that energy prices have dropped, but it's a long road to hoe for a lot of households, I think, moving forward in that regard, and definitely will have an impact on where beef prices go.
Bryan, great thoughts. Before we let you go and wrap it up here today, anything final you would share or reiterate for folks as they're looking at their operation and looking at their marketing plans and more here as we head into 2024?
I think it's just really interesting as we move forward here. We have seen corn drop in the last year from $8.50 down to $4.50 to $5. I don't think that situation gets better as we move forward here. I think you're going to have further drops in the values of grain. I think the producer is going to have to stay on his toes as far as marketing goes. I keep reiterating that we've got Dees of 24 corn just hovering above $5. Right, wrong, or indifferent, it still feels like today that getting some risk management in place to mitigate the risk that you're going to have moving forward is incredibly important. And that's probably even the case in wheat, as we have watched July Kansas City futures drop below 650. I'm still not certain that getting, dipping your toe in the water, at the very least, to manage risk is just huge at this juncture.
Well, we appreciate the thoughts and the analysis. Bryan Irey with Crossroads Co-op. Bryan, Merry Christmas. Happy New Year to you and yours. Thanks for joining us on the show, and we'll look forward to talking to you again in the future. Thanks so much.
Thank you so much, Jesse. Merry Christmas and Happy New Year.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.